I'm Gwen Preston of Resource Maven. We're here at the Metals Investor Forum in Vancouver in January, and I'm joined by Justin Reid of Troilus Gold. Thanks for being here.
Thanks for having us. Great to be back.
So Troilus, I mean, there's a lot coming for Troilus this year. The next big news event that's coming is this resource update. And I want to talk about that, but I think what I want to preface it with is that the resource update is actually sort of a small step towards a huge step that's coming later in the year. The resource isn't going to include a bunch of the new zones that you're tagging into that are going to make such a difference in the feasibility study that's sort of coming. So what's the resource going to do?
I mean, I think the resource is going to encapsulate all of the Southwest discovery, right? Which we've taken from 600 meter strike length to well over 2 kilometers,
right.
600,000 meters to something significantly more. It's going to bring in 300,000 meters of drilling total.
Yeah.
Our last resource, 8.1 million ounces, was only just less than 90,000 meters. So super big growth. We have 8.1 million ounces equivalent. A lot of that drilling was infill, right?
Right.
So a lot of it is taking inferred into the indicated, and we're seeing, you know, a 95% plus conversion rate, which is spectacular. But the grade profile is going to be very, very similar. Troilus is what it is in the main zones, which is fine. This new drilling in our hanging wall zone, X22 in the connector between our two main pits, that kind of has a 3.5 to 4 kilometer strike length being drilled out now, you know, is coming in 1.5 to 5 grams, significantly higher depending where we are. And when we're looking at grades even that are just twice what the average grade is, then that has some material impact on the early years of a mine, especially when it's already stripped.
Absolutely.
Right? It's at surface. There's no pushback. The ore is there.
So this resource that's going to come out will add a bunch more of largely the same. The Southwest is a little bit better than the open pit stuff that's near the old mine, but add a bunch more. I'm saying a good amount more of the same. Then you're going to move before the end of the year to a feasibility study, which probably when compared to your PEA won't even seem like the same project.
Well, I mean, it's almost irrelevant.
Yeah.
The PEA, it was September of 2020. The PEA, so inflation has doubled everything. CapEx is blown out. Yeah. So it's going to be a very different project.
Yeah.
But we're already permitted. So this is going to be, a lot of things aren't going to change. It's going to be 35,000 tons a day. Right. Right. At the background grade of the average grade of the mine, you know, it's going to produce between 250 and 300,000 ounces a year for 20-year plus open pit. Now, if you say, okay, let's not take 0.8 to a gram for the first 3 to 5 years, let's take conservatively 1.5. Sure. Right? So then you are almost doubling the cash flow and the production in the early 2, 3, 4 years. Yeah. And so what that does, it drives your NAV, it drives your payback, and it gives you a bunch of optionality that we don't have the answers to right now. Sure. If some of these, you know, we hit 50 meters of almost 5. If some of these really blow out and we don't know yet, we're on top of them now. You know, maybe it provides you the optionality of coming in at a slightly smaller scale, which means a slightly lower CapEx. Right. And then build into it. But we don't know yet. So, you know, it was, we didn't want to put out a pre-feasibility that was wrong the moment we put it out. And so we're actively kind of going at it. A lot of things don't change. Metallurgy doesn't change. Sure. We've taken a bulk sample from these new zones, so we're making sure it's the same as the others. The tailings, the engineering, the throughput in the mill size, all of that doesn't change. So it's really about what does that early resource look like? And that's what we're doing. For sure. And grade, well, grade really helps. Sure does. It costs a lot. Everybody knows it costs a lot to get through this stage of a project. Like you say, a whole bunch of infill drilling that you've just done. You'll need to do more of that, engineering, all of this. But you have a bunch of money in the bank. Do you want to talk about what happened with the Sayona deal? I don't know if the market really figured out that you unlocked value from ground that you decided you weren't that interested in and was going to cost you to hold over the next little while. Yes. As we added ounces, we defined the model and really figured out that this belt had been incorrectly explored historically, so structurally rather than stratigraphically. And so we acquired through acquisition and staking and land deals a portfolio of about 1,500 square kilometers, huge.
Big.
Last 3 years, we spent between 7 and 10, depending on how you count, $1 million. Airborne geophysics, ground follow-up, some preliminary drilling, soils, tills, all those things. And what we did find is that we have a major gold trend within that, which is about 500 square kilometers, and that's ours. We're not touching it.
You're not giving that away.
We're not giving that away. The rest, about 1,000 square kilometers, has potential, but we'll need a ton more work.
Right.
And just the carrying cost that alone, because every year it gets more and more expensive to carry, was going to be about $10 million.
Right. That's big.
And people don't think about that.
Yeah.
So from us, we were lucky enough that an Australian, very near-term lithium miner, their growth asset, their second asset, is a Maven deposit at the end of our road.
Yeah, just south of your project.
23 kilometers on the road.
On the road.
Where the road T-junctions of the highway is right there. And they only had the ground around their resource, like a box around the circle type thing. And so they needed ground to lay down the mill, all tailings, all those things, because you can't put out a PEA to give economic value to it unless you own the ground to build the infrastructure. So we got a deal. They're also big explorers. And so we sold it for $50 million in kind of two tranches. $40 million in their stock, and it trades $95 million a day on the SX. So it's basically...
Yeah, that's important. It's not like you have stock that you're not going to be able to offload. You could offload this stock in a few days if you wanted to suddenly have access to that capital.
Yeah, it was free trading. There's no restrictions. Yeah. It's in the account right now. It's as good as cash, right? And then they took a private placement for another $10 million into us at a 35% premium to market.
Lovely.
And so they're now one of our largest shareholders with Franklin and Investment Quebec. Investment Quebec happens to be their partner at Maven as well.
Right, yeah.
And so right now our average cost on that stock was about 21 cents. The stock's trading at 30. Every penny it goes up, we make 1.6 million.
Yeah.
So our cash and call it our working capital right now is kind of sitting around $60 million, which, puts us in just such a great position, which we haven't been in a long time.
Amazing. So you're funded to do the work to get to feasibility on an asset that is going to look, in terms of its, permitting perspective, is going to look like it did, and that's important because you've already submitted your project description, which is important because this is an advanced asset, but economically is going to be very different than the PEA from a while ago.
Absolutely.
All right. Get out there and do it. I look forward to keeping up with the news.
Thanks.